Hi, this is Dave, and welcome to the weekly market recap. This is Sunday, February the 17th, 2013, closing out the week for Friday, February the 15th. Happy Family Day weekend. I hope you're all enjoying it. I'm recording this video, as mentioned, on Sunday, and let's just get right into it. There's not really a lot to talk about this weekend in this week's market recap. Starting out with the let's start out with the Dow futures as we usually do on the daily chart. So what you can see here is we've had this sort of band, which is now turned into a sort of box play here of activity going into resistance here around 13,955, support around 13,825, and for the last 2 weeks or so. For the past 2 weeks or so, we've just kind of been going sideways. We've probed, above this consolidation range. We probe below the consolidation range. And essentially what we really have is just, a box play sort of setting up. So we just have a consolidation. You can see that we've been trying to push higher. We closed, close to the top of the range at, 13,948. So we closed really close to the top of this box range here, but there's really just not much going on, because like you can see here, if you look at the MACD, you've got actually a divergence taking place here where the MACD is kind of in the top of its oscillator range and it's looking really toppy, and then it's crossed over to the downside and it's actually going lower, while the price action is kind of drifting higher. So that's a warning sign right there. You can see that it crossed over here, in the histogram. So that's sort of a warning sign here. But having said that, you really don't have much of anything to do here, in my opinion, because the upside potential is limited and the downside potential pullback is limited. So there's really not a heck of a lot to do. So if we take a look at let's take a look at the cash sign INDU, the Dow Industrials. We've been talking about this level at 14,198, which I believe is the October or November? I believe it's the October 2007 highs. So it's possible that we could still come up and, boom, just, run into that level, retest that level. At this point in time, you can see the divergence here on the MACD. You can see the stochastics have been overbought for a long time. They're starting to roll to the low side, but, anything could really happen here. We could break to the upside, we can break to the downside. From my perspective, it doesn't really matter what we do, because neither one of those have really enough cushion in them to be tradable events, in my opinion. So really what I'm looking for is a major, some type of a major event in terms of a major pullback, let's say down into this sort of, that's a terrible trend line, but like if we had a pullback all the way down into this kind of trend line, then I'd be looking for, some support and a possible push off of there to take a long from a swing trading perspective. But, where we are in terms of the range itself, here was the low, going back into the middle of November, and here, we have a potential high from, measured from October, let's say 2007, you're in the top of this range here. So there's really not, from a risk reward standpoint, a lot to do there. So I hope that makes sense. Not really interested in doing anything. I'm just kind of commenting on where I think we are in the cycle of this movement. Now, you've got, this potential level that we could test, or, we could potentially pull back, but we really need to get out of this range that we've been setting up for the last 2 weeks. Okay, let's take a look at the sister indices from the stock indices standpoint. So the S&P futures are, kind of looking the same. You know, we've just been grinding higher there. We've been going sideways. You can see the MACD is starting to look toppy, rolling over. But this looks stronger than the Dow does, right? And then if we take a look at the NASDAQ futures, we've just been kind of holding up in and around this range as well. So there's really not a lot to do here either. And then if we look at the transports, which kind of led the charge here, okay, for some reason that didn't come up. Let me just see here. Okay, here's the transports. Transports have kind of led the charge here, and you can see we've looked at a measured move of, you know, this swing from this low to this high. Let me just grab the pen here. So from this low to this high, we measured the move here and we projected it off of this point. And you can see that gave us 100% right up and around this area. We've kind of been grinding higher through that area there, as you can see here. But this candle here from Friday looks like that looks like a reversal candle to me, or at least a candle that says, you know, at least we're going to pull back. Because what you can see here is it closed, you know, right off of the highs there. Now let me just zoom into this so we can get a better look at it. But you know, and then maybe it'll make more sense looking at it a little bit more microscopically. But you can see this candle here. You can see how we pushed up, you know, like with the doji, that, you know, the next day could be either way. I think of a doji more as a pause to refresh, you know, where you've got this kind of a candle pattern. But when you get this kind of a candle pattern where it comes up and then it comes down and then it closes down here, like you have here, to me that looks indicative of a potential pullback. You know, like this would be considered more of a bullish hammer. This would be kind of, you know, the inverse, where you're looking for at least, you know, a pullback to some, you know, relative support levels. At least that's what I would be expecting after seeing a day like this. You know, we've already hit the measured move, you know, of that swing, and now we have what looks like a potential, you know, weakness, you know, where we've closed close to the lows off the highs of these new highs. So in other words, we hit new highs and then we close close to the lows of that day. So if we look at some other indications here, you had a little bit of pickup in volume, and you can see that the, you know, the MACD is, you know, as the price is going higher, the MACD is going lower. That is a divergence with a capital D. So divergences are areas to get cautious, you know, where you see indicators rolling lower and price action rolling higher. You know, those are cautionary signs. So hope that makes sense. Not really that interested, you know, in anything here, just looking at the warning signs in the transport. So, you know, I hope that makes sense. I've just messed up my charts here. Let me clear this off. Let's take a look at some other markets. Let's look at the dollar index. Now, you know, right now there's something going on with the dollar index. I'm not quite sure what it is, but we'll take a look at the euro in a second. But one of the things that is a cautionary sign to me is, you know, the guys and I have been talking a lot in our live trading room about, you know, we're seeing a picture set up where it looks like, you know, bonds potentially want to go lower, right? Bonds potentially want to go lower. The stock indices, you know, they could go either way, but some of the guys are thinking they're going to go lower. Some of the guys are thinking they're going to go higher. And then you've got commodities. You've got commodities that were, you know, essentially we're expecting to go higher. So this isn't happening yet. The bonds haven't really let go to the downside yet. The stock indices are, you know, just, we covered those. They're stuck in a range. And commodities, which we were expecting to go higher, are not really following through. So, you know, with the bonds going lower, we were kind of expecting, you know, the US dollar to go lower too. But if you look at the US dollar, the US dollar seems to, you know, have held support, and it seems to be picking up some strength here. This is a cautionary sign. Now, one of the things that I noticed, and we'll take a look at the euro in a minute, but as the euro was making a nice little bull run higher, the dollar index was really, it was going lower, but it was really holding support really well. You know, it was holding 78.85, 79.28. It didn't want to let go of support. So you were getting, you know, this kind of move in the euro, and you were getting, you know, this kind of pullback in the dollar index. So when you see that kind of stuff going on where, it looks like it's just letting, here's the euro, let's say, here's the euro, having a nice little bull run higher, and the dollar index is, it's only pulling back a little bit. Here's the US dollar index, let's say, and it's only pulling back a little bit and it's holding support. It almost seemed to me like the dollar index was waiting for the euro. Go ahead, euro, do what you want. Make your run to resistance until you can't go any higher. I'll just kind of hold on to support here. It's not moving on a one-to-one basis anymore where you're getting the same sort of correlated move that you would expect, out of the dollar index. So to me, that to me is a story in itself where to me it says there's potential strength in the US dollar. You hear a lot in the news about, pending potential currency wars and, where people are trying to devalue their currencies in order to, in order to keep their economies going, because by devaluing their currency, they make their exports more attractive to other countries, things of that nature. I don't claim to be an expert in those fields, but, I see the, the stories and the headlines and, talk to the trading gang about, those kind of concepts from time to time. To me, this is a cautionary note. I think we really need to keep an eye on the US dollar index to see, that this might be the driver or, the lack of driver for other markets to get moving. So I'm really keeping a cautious eye on the dollar index here. And I think that's really going to tell the story. So what we were sort of expecting to have happen is not really happening. And that is a story in itself. So we're not really positioned around it. Or at least I'm not, from my perspective, I'm not positioned around this in any way, but I'm just keeping an eye on this because what I'm expecting to have happen isn't really happening. So, if you look at the MACD, it's starting to cross over the zero line on the dollar index, from a bullish standpoint. And what would really change my mind on this is if my trending indicator rolled over, blue to the bullish side. So keeping a close eye on this. Let's switch over to the euro and see if that's giving us any other, sort of data points as to what might be going on here. So here's the euro. We were looking at, I've been marking, as the weeks go by, I've been marking potential levels here in the euro futures that we could, where we might potentially find resistance, where we might potentially run up to, because as you can see here, we've been putting in a series of higher highs and higher lows. We've been in an uptrend. So at this point in time, you've got sort of a trend line going here and a secondary trend line going here. And you can see at this point in time, it looks like it might potentially be failing, that trend line. And we may potentially be putting in lower highs, off of this high. So here we've sort of got sort of like a triangle forming here. And it'll be interesting to see if we kind of break to the low side. But some of the levels that we were looking at, when we, $1.30 was the key level, and we started trading above $1.30. You could see we broke above, we came below. We were trading, around this central kind of magnet for a while, and then we broke enough above it that we found support here, and then we moved higher. And then, we looked at some of these levels here that have been in play, over time. And the euro is really, come up and tested all of those levels and then come off of those levels and now is finding, support above $1.3282. So at that point in time, if you look at this move up in the euro, take a picture of this in your mind. Take a picture of this in your mind. That run up in the euro, that's a nice little run up, from $1 down here, $1.2672 to $1.36. That's 1,000 ticks from this point to that point, or 1,000 pips in the Forex. If you're looking at the Forex, that's 1,000 pips in the Forex market, or 1,000 ticks in the futures market. Even when we cleared $1.30, we came all the way up and tested like about $1.37. That's 700 ticks or 700 pips. Now, take a picture of that in your mind, and now take a look at the dollar index. And the dollar index has been stuck in this range, and it held support, down here. It's hardly moved. It's not the same kind of reverse move that you would see in the euro, when the euro represents, let's say, 46% of the weighting of the dollar index. So, some of the guys have been explaining to me that maybe it's the yen, because the yen is really sold off. So the yen is really taking the brunt you can see that's a pretty wicked sell-off. The yen is really taking the brunt of that move. But, from my perspective, from my understanding, the yen doesn't really represent, that much in terms of the weighting of the dollar index. But that being said, that might be a plausible explanation for why, the dollar has remained strong, the euro, and hasn't really sold off. So that's, it's possible that the yen maybe took the brunt of that. So having said that, the key takeaway point from this, in my opinion, is we need to really watch the dollar index and see, the dollar index to me looks like it may be potentially trying to, put in a bullish bottom off of these lows and off of these support areas here, because you can see, we've had the 8-period moving average cross above the 21, but we've had that happen again. And then we've got some obvious resistance points overhead. But if we, we've kind of broken that sort of triangle trend line, if you extended this way. And if we start, doing this, we've really got to keep an eye on that, because that's going to be, a real game changer if we really continue, to start stair-stepping higher. So I'm going to be keeping an eye on that, going forward. So that said, let's take a quick look at some commodities, and then we'll really wrap up this video. So let's start off with gold. Gold, I was not expecting this kind of a move in gold. I was really expecting it. We put in a lower high here, and I thought we would break above some of this trendline resistance, which would give us sort of a long signal to the high side. But all it's really done is come back down, tested these lows. These lows were my line in the sand between long and short. You can see the indicator is negative. The MACD is negative. We've had some volume come in. So this volume coming in here, that's a potential, a spike low scenario. But, having said that, gold has the potential to come down lower. If you go back in history and look at, where some of these levels, these support levels might come in, for example, 1539, you could come all the way down to 1585, 1539 if this really gets something negative going to the downside, to test these lows. So having said that, I was more bullish than bearish on gold, but now that it's broken, this low here, I don't like it to the long side, and I think that, that was really the line in the sand between long and short. So, I thought we were going to get something going here with this sort of break of this trend line, this pullback. We held, and I thought we were going to do this. But, anything can happen in the market. That's why you really have to be nimble, and you really have to protect your positions, because you're not always going to be right. So, having said that, let's take a look at silver. Silver, the same kind of scenario, except you can see we're holding these support levels, at this point in time. Right? You can see from an indicator perspective, silver found resistance at the MACD 0 line. You can see that, right in here. I thought that was interesting. Stochastics are really buried to the downside. We could get a potential bounce off of these levels. Having said that, for silver, in order to remain bullish on silver, I mean, gold is really kind of led the way down there, but silver, the line in the sand to me is this support level right there. Okay, these lows. Not even that spike low, these lows here. And we're right at those levels. We came off them a little bit, but we're right at those levels. So at this point in time, I'm really neutral on silver. In my opinion, I don't really like it either way at this point in time. Let's take a look at natural gas. Natural gas, the same thing. All these chart patterns look the same to me. It looked like we broke trendline resistance. We're putting in a lower high. We established a nice 45-degree angle to the high side that we were following, and I was looking for a break to the upside here, off of this kind of triangle here, and we didn't get that, but we're still above the lows here. We broke the 618 of this move from this low to that high. That was kind of my line in the sand there, but ideally you need to hold these lows, and we are still holding those lows, but at this point in time I just don't like the pattern anymore. Okay, I don't like the pattern anymore. You really need to see this kind of thing happen where it's going to break that trend line. And then at that point there, that's where I would be, interested potentially in the long side from my, in my opinion, from my perspective. So I know we don't really have a lot to talk about, and this video is probably getting a little bit long in the tooth. So it's getting a little bit, longer than needed for the current market action. So let's just jump over to, let's see, there was another market I wanted to look at. We looked at gold, we looked at silver, natural gas. Let's look at crude oil. Okay, so crude oil is really struggling, with some of these levels here. This almost looks like a double top, but now we're really forming, sort of a box in here, right, where we're holding support. So I'm kind of looking at this as a potential box play, where if we break to the high side, we could potentially come up and test this 101 challenge point, psychological and technical, $100 to $101 a barrel, potential high resistance, major resistance, or we could come down and flush all the way down to, some of these levels down here, like let's say 92, where you've got some stronger support in and around this congestion area, these highs, and, 1-to-1 basis of that, that width of this box. Okay, so I hope that makes sense. You could potentially project that down 1-to-1 if we break those lows. So, this is kind of like the stock market, where the stock indices, where, you've got a box setting up. You could come into these highs, or you could come down into those lows. So, that's really a 50-50 crapshoot. Don't really like it either way, but those are the levels that I think make sense. $92 support, 100 to 101 major resistance. So let's since we're extending this video a little bit, extended holiday video, let's take a look at the 30-year. And we were looking at the 30-year as potentially selling off and kicking off a move lower in the bonds and potentially higher interest rates. So this is still sort of on the table. This is something that we may have an open discussion about, to get, people's thoughts on this at the next upcoming meetup at the end of the month, which I'm soon to schedule. Stay tuned for that. So this is kind of, an open discussion, an open forum where people think, this is going. So the guys and I have been looking at, some of these key levels here where this green line is, as, are we going to hold on in the 30-year? Our bonds, really going to kick off a move lower because they've been bullish for a long time. So you can see there's a lot of activity and tug of war, right in around this area. So what I'm looking at is, I guess this is the new level here. This is sort of, this support line is the magnet, but this is sort of like, we're going around this level. If we break these lows, then we could potentially come into, some of these levels down here. But I think this level here is really where the rubber is going to meet the road, just based on, my observations of what I've been looking at. And this level comes in from, let me just clear this off. This level comes in really from this major uptrend from this move. This was, let's say, the major move up, and, the pullback in the direction of the trend. So that's where the 618 comes in, of this, from this low to these highs. You can see this is sort of looking toppy. The question is, are we going to break some of these levels and push lower, to retest some of these lows? I don't know, but there's something setting up in the markets. We've been, we've been coiling up. We've been consolidating for the last couple of weeks. I think there's something major setting up in the markets. So when the move presents itself, it will be obvious. At this point in time, I don't like trying to guess which way it's going to go. So what's going to tell us that the market is ready to, really to kick off the next major move? I think it's going to be the dollar index, and I think, it's going to be the 30-year, if it's going to hold these levels or not, or if it's going to really break down and get something going. So that's sort of where I'm looking right now to get a heads up as to what the next major market move might be. And, as we know, all markets are correlated, so that's going to affect all markets in one way or another. So that's kind of what I'm looking at. I hope that helps, and we'll look forward to seeing you at an upcoming meetup or at the next video update. Meanwhile, have a great Family Day weekend. We'll be taking Monday off in the markets and getting back into things on Tuesday. So enjoy time with your family, enjoy the time away, clear your head, and come back in fresh hopefully on Tuesday into the market. So have a great weekend and all the best.